At this point, we're approaching a swing low here. You can take this trade back to the top. It's kind of like what your girl is talking about here. I would want to drop to the 15-minute chart at this point. Now, what's wrong with taking this trade right here? Anybody?
Did it close above the moving averages?
No. It didn't close above the moving average. So the reason why I'm interested in taking the trade is because if I look one time frame up, is we are above the moving average, right? We're above the moving average here. So worst case scenario, in my opinion, we're going to pull back to these moving averages, right? We'll pull back and retest these moving averages. So you can have a little bit longer stop loss based on this higher time frame moving average. But you just have to understand on this 15-minute chart, it hasn't broke yet. The thing that gives me confidence, though, with this 15-minute chart is the green candle did close above the moving average. You see that? But even with this trade setup, I'm not gonna give myself the extra cushion because I hedge for one, but for two, I believe that we closed above that setup. If I get one position in this trade going up, it's a 4.5% trade, right? If I get two positions in this trade going up, it's more than that. Now, there are two things here. I can trade this to equal highs, or if I want to guarantee myself profit, I can just trade to these lows. I'm going to stretch mine out to try to get 100 pips. Okay, 100 pips will make this a 6% trade. We'll just hit play and see what we got. See if we can even get close. Okay, at this point, I'm probably, well, once we break this high, I'll be confident that that we're going to the right side. And it's hedged. So we'll hit this zone and then we'll go back up. I can't kill my hedge until it gives me a directional bias. If you look at the higher time frame, this is going to be a zone, like supply and demand, right? So this would be my zone. I can't break this hedge until it either goes past this zone or it goes above this high, which I'm almost 100% sure at this point that it'll go higher than lower. We'll see. It tapped into this zone. We'll see if it's going to push up or push down. I really need to look at my 4-hour. Okay, so this 4-hour candle is on top. There we go. So you see how it broke? Once price broke this high, I can kill my hedge. I can kill my hedge on this pullback. And you could either add a position, which you don't have to, but you know without a doubt that it's going to go higher because you hit your zone It didn't break your zone. You just tapped in and it pushed higher than this high. Once it pushed higher than this high and pulled back, you can take off your hedge. You could have taken this off in increments. You know, maybe you would have started with a chunk as it pulled back, and maybe you would have had it the second pullback. Maybe you would have broke off another chunk. You know, maybe you would have broke off all of it. I don't know. However you come to doing that as a trader, you have to kind of figure that out, right? I personally probably would have took the majority of it off on this pullback, right? And I would probably look to add to my position the higher that it got, because once it just tapped the zone, right, and pushed up, I kind of know that, hey, this trade is going in my favor. And if you look at it from a big picture, you have what here? Your swing low, right? If we weren't sure before, you definitely sure now, right? You got to swing low, and it also gives me confidence that we're going to go to these highs up here. There's another zone here. Do y'all see that? Do y'all know what a zone is? Or am I talking above your head?
What's a zone?
Okay. A zone is a supply and demand zone, right? Or order block, or whatever you want to call it. Once I would have got to the top of the zone, I would have had to take profit. But a supply and demand zone, you know, like whenever you see this up move and then you see the long down candle, everybody see that? You see this green candle up, and then you see the candle that pushes down. You can encapsulate that. That's an order block on some level, right? An order block is just an up move and a longer down move. These red candles going down and then the green candles going up. That's how I know this is a zone. This is a zone. This is an order block on a higher level. All price is doing is coming down, tapping into this order block. Is everybody tracking that? Like if we go up to the 1 hour, it'll probably be an order block, or maybe it's the 2 hour.
Yeah, we don't speak retail though, so we don't know what zone is.
Retail, I mean, supply and demand is pretty much smart money too.
So a zone is an order block?
Yeah. See that? See it right there? See the order block?
Yep.
See how all it did was come in?
Rally to me, it looks like the base in a rally base rally, you know.
Well, look, now do you see it?
Don't speak retail.
Look at my screen. Do you see the order block? You see the tap in? See the tap in at the top? You guys see it?
Yes, we're simply saying we don't speak retail. We don't call it a zone. That's all.
No, it's a supply and demand zone. However you want to look at it, order block, supply and demand. How do they relate to order blocks? You see it, Kenya? A zone is an order block, man. Like you'll hear some people say, I just trade supply and demand, and it's an order block. You know, they call this a demand zone. So it hits the demand and it goes up to the supply. Kim, when you look at charts, do you see supply and demand zones?
She speaks retail, so yes.
No.
All of it's retail.
So wait, I know they're giving you a hard time, but Kim, that's how I learned the zones was from you, but I was drawing them a little bit differently than how Todd is using the order blocks to draw his zones.
But it's all the same. This is a zone, right?
Yeah, it is.
You
So
see that everybody calls shit, it's a zone, man.
This is the demand zone, and this is the supply zone.
Mm-hmm.
So if all
People
you have to
call it different stuff.
What's that?
I was just saying, different people call it different things.
Right,
But
but
it's all the same.
it's all the same. And if you on this 15-minute chart, all you have to do is recognize your dips, right? Like it dips down and it goes up. You know that's a zone. You got this W formation, double bottom. If you're in Ruby's group, you got this double bottom. That's how you know that's the bottom of your market. Price pushes up. Oh, now it dips back into your zone. You know it's going. If it doesn't break through this order block, this zone, you know it's going to the top at that point. Like your confidence should be on like 50. When it taps down, okay, I didn't expect it to come back and tap down, but it does that. It tapped down. That's cool. So this gives you your confirmation that price is going to go to the top now. The only thing you don't know is how far this wick is going to go into this zone, right?
So you know it's going to the top and not to the.
That's the zone, because you see where price came from. Price came from this zone.
Listen to me. Listen to me. What I'm saying is, how you know it's not just a pullback to the golden zone or the OTE area versus going to the top.
This is a pullback to your golden zone. In this case, your OTE. This is an OTE pullback. Price pushed up, it pulled back, OTE, and now it's going. That's how you know. That's exactly what we got. There's two ways that you can look at this. You can either look at it from the top of this zone pushing down, right?
Mm-hmm.
You never got your pullback to the OTE. It just pushed down. Then it came down here, you got your pullback to this OTE, and now it's going up. This is the zone that it's going to. Price.
Can you put your fib back up? Because I wanted to say something as well.
Okay.
Just to add, a little value, extra value. So when it came back to the 78, I'm the 78 girl, right?
Mhm.
And it went to the -27 because that would be your first TP.
Right.
And then it pulled back. It did not break structure to the downside. Like it didn't break like where that expansion, it pushed through because we had this conversation on Monday because there was a push through. Like that big, the one, all the green candles that push. No, right before that.
Oh, this right here.
That's like a sign that price is going to keep moving up, right? So the next TP, or instead of getting out of that trade, is to take it up to the -61.
Which is
That's
here. Which is the beginning of your zone.
Yeah, I just wanted to add that because we had this conversation on Monday about when price gets to an area and gives you like an expansion and that
Which is
going to be moving up a little more.
right. So I think this is important because it doesn't matter in the long run what you call it or how you trade, as a trader. Price is doing the same thing, whether I call this order block or whether Kim calls it a zone. The important thing is that you recognize what you're seeing. You're seeing price come from this order block. It pushes down, it pulls back. It doesn't violate your moving averages. It pushes down to the bottom where it makes this semi-double bottom. It comes up, it pulls back to your OTE, and now it pushes up to the top, back into your order block. So that's all that price is going to do throughout this week. And if you look at this on the daily, right? If you looked at this on a daily, that first day on Sunday, price pushed all the way down. Monday and Tuesday, it just came back up, right? It came back up to these same double order blocks that we've been at this level the whole time, right? It's either going to break through or guess what's going to happen? It's pushing right back down. So you have the market, you have an advantage over the market, because if you look, when we talk about moving averages in a trending market, the moving averages are going to be on the top in a downtrend, and then they're going to be on the bottom on an uptrend. When the market starts consolidating, they're going to be right in the middle, right? So if you're a trader and you look at this on a daily, you're like, man, it's just price is consolidating. So I can trade it from the top to the bottom, to the top, to the bottom, to the top, to the bottom. And a savvy trader, you don't have to get the entire move. You might set you some parameters that go right across here. And all you want to do is capture the moves, this 90 pip move, you know. I want to catch the 90 pip move down. I want to catch the 90 pip move up. I want to catch the 90 pip move down. I'm going to catch the 90 pip move up, right? And all you do is you're doing this through your, you know, along with your plan, right? You don't need to catch every move. So if you didn't catch that huge down move, hopefully you caught the huge up move, right? And for what we're trying to do here is we're trying to settle in on a certain percentage, right? So even if I didn't get, you know, my whole 5.8%, let's say when I cut my hedge off, I lost, you know, a 0.5% or so. Now I just got 5% or 4.6. That's a 4.6 trade, right? Once price goes to the top, what do I need to see? I either need to see it break through here, like we got the rejection candle, but it's either going to break through and go to the upside, or it's going to turn around and we're going to go through this exercise again, right? And the thing is, on this 1 hour, you have a bearish order block, right? But it's on the wrong side of your moving average lines. What do you have on the 4 hour? The 4 hour, you have nothing. So you don't have to make any decisions here as a trader. You just understand that it's either going to respect the order block or it's going to break it. And if it breaks through this order block, guess what? It's still another bearish order block here. And if it breaks this order block, it's still another order block up here. So we don't have to do anything as traders. We just have to watch. And if you're going to stick with this pair, I'm going to fast forward this through this move right here. Okay, this is where it becomes like apparent to me that we're probably going to break back down to the bottom side, right? Because on the 1 hour, like I know the 4 hour it hasn't broke, but on the 1 hour, we're going to get a candle closure on the right side of our moving average. So once we get this candle closure, I can hop in this trade, and I'm probably going to have to drop down to the 15-minute. But once this candle had closed, you're in this short here. Let me get out of here. This is about a 12.7 pip stop loss, right? I don't know what you need at this point for your percentage, but it's probably not very much as far in terms of pips, right? So it's probably going to be about 50 or 60 pips. We'll go down here. 65. We'll just do 7. We'll take it to the bottom where we got out, or where we got in for the up move. Looks like it's going to go back and tap in. Let me keep expanding this. This is dangerously close to our TP. I don't know if I would have watched it pull back up. It's not gonna see this. We should have taken profit when the trade was down here. Because in essence, what we did was we risk. This was 60 pips, and we're trying to get 69 pips, right? We can't turn down the 60 pips for 9 pips at that point, because you made 4.76 and you were trying to make 5.38. Y'all see that?
Yes.
So you would have made, I don't know, 8%, 8% or so on this trade if you had taken your profit at the 60 pip mark versus trying to pull the 69 pip mark.
Mhm.
So with those two trades, if you just traded NJ and you traded it back and forth, basically back and forth on this daily range, you would have made, 8%, and your hedge would have picked up that first time pretty much.
Mm.
And that would have been a decent, I guess a decent week, as far as you trading. I didn't call this trade out. I didn't call this trade out during the week, right? To me, there were easier moves that you could have made that wasn't going to go back and forth. I think I called EA and GU. Did anybody take EA or GU? Did anybody look at EA and GU?
I took GU.
Did you make
And
one? Huh?
I was in EA last week until beginning of this week, and then GU is what I took.
So you just stayed in EA the whole week?
No, it kicked me out.
What were you trying to do with EA?
I was selling it last week I was selling it, and then it turned around on me.
Well, but hold on. But we talked about EA.
I know, that's why we don't need to talk about it now.
Okay. So I just want to go over this with everybody while everybody's on the call. Because this is important, guys. This is what we looked at last week. It was a bearish order block. What's wrong with this order block though? Anyone?
It is
Yeah,
above the
it's
moving
inside another order
averages.
block.
It's not 100, it's not a large one. And
It's
It's above
inside
the
another
moving
order block.
averages. That's the problem. That's why you don't like it.
I can't. with-
So listen, this is
I was
very,
saying it was inside another order block.
no, that's not it. The problem is it's an order block that's above the moving average. It's a bearish order block saying that it's selling, but price is above the moving average. So with this order block, especially with order blocks like this, you have to take it the opposite direction first. I take all of my trades the opposite direction first, right? If you're going to trade this strategy, you have to do it exactly the way that we kind of recommended. So this move was a move down, but it didn't break the order block, which means price is going up. It's just pulling back to your trend, your moving average, right? If you look at prices come from the bottom, it goes up, gives you a red candle, it pulls back to the moving average, it pushes up, it's pulling back to the moving average. So what's the expectation here? It's either going to push up or it's going to push down past the moving averages. If you're taking trades, sell trades during an uptrend, it's not going to end well for you, so you have to buy it first, You want to buy the retracement first. So this way, if you get in the retracement buy and it doesn't stop buying, you're on the right side of the curve, right? This is very important for you when you look at your charts and you start taking these trades. As a matter of fact, Selena posted the results of these trades in Discord, and I had to leave a comment because she said 2 of these didn't do what they were supposed to do, and this was one of them. And this did exactly what it was supposed to do, because if you take this trade, you got to trade it up first. And in this case, if you had just got in for the buy, you would have made, you know, everything that it had to offer. You know, however many pips that it went this week, you would have made. You'd have made that you know, that whole range that it traveled, you would have made it, right? You would have made it up first. Once it turned around, you'd have made it down if you didn't already have your percentage. This was a great opportunity because this traveled both ways. So it went way up, you know. I don't know, maybe it went 200 pips to the top side, then it turned around and went that same amount to the bottom. So it offered a great opportunity. 1, 2, 3, 4, 5. Let me delete all these markings. Friday, Thursday, Wednesday, Tuesday, Monday. So when the market opened, look at this huge candle that it went. If you count the wick on this candle, it went 251 pips to the top side. So most people should have made their money Sunday if you took this EA trade and you traded it like I suggested we traded last week. Most people would have made their money. Then it turned around Monday. You had to come down from this 200 pip range. And the next 2 days, it goes down 300 pips. That's 500 pips in 2 days that this gave out, right? Then on Thursday and Friday, it went up. So that's another 179 pips. If you didn't make your percentage on this, you can kick yourself, but just understand that you have to adjust what you're looking for. Like we explained the move ahead of time on Sunday. And really what I would have hoped for is everybody would have made their money Sunday during that 200 pip move. It was kind of hard not to make money on that 200 pip move, in my opinion. Then it turned around and sold 300 pips to the bottom side over the next 2 days. So if you missed the move up and you just got in for the move down, you really should have made your percentage, you know. And if you didn't, you know, kick yourself in the shorts, but get back on the horse. Like, understand that these moves happen every week. And we're going to talk about a couple that's going to happen this week. So it's another opportunity to get back in the market, but you have to trade the way that I'm suggesting to you to trade, because the move is going to happen. It's just, you know, are you going to be in that move? And GU, you guys have any questions over EA?
Can I just repeat back what I think I heard you say? Just a short summary. So EA had a bearish weekly OB, and then so we needed to find the golden zone on the weekly candle and then buy it up first. And even though it bought past the golden zone, we were in for the buy. We should have probably made our 10%, and then we should have hopped in for the sell because we were already looking for a sell entry anyway.
That's correct. So it doesn't matter what trade we take, right? We're always going to take the same steps. So in this case, what I said last week was I took the fib of this bearish candle, right? Y'all see my golden zone was on here. What I said to everybody last week when I said I was going to take this trade was I anticipate price moving to this golden zone, right? From where price is right now to the golden zone was, I don't know, 70 pips. I know I can make my 10% in those 70 pips, but maybe people would struggle. So I said, once it got to the golden zone, we have to see, maybe it goes to the 78.6, at which point everybody should have had 10% at 100 pips. I didn't know it was going to go 200 pips up, but that's beside the point. We thought that once it gets to this area, we assumed, rightfully so, that it was going to sail down and maybe test the moving average. Even if it didn't hold, we felt that it was going to at least test the moving average, right? So that's what we anticipated. Now, it actually went a lot higher, and it came down and tested, and then it bounced back up. So I didn't anticipate all the movement, but I knew that we would get 2 of those moves. So all you had to do as a trader was execute those moves. And, to me, it's best to catch one that moves on Sunday because we're all here. We're all awake for the most part. I know there's some people on the East Coast that those trades might run into the night with those guys. But if somebody is telling you, or if you can make 10% on Sunday night, I would go to work tired on Monday. I'd go to work tired every Monday if I can make 10% on Sunday night. Everybody else, like all you guys have to make your own determination on whether it's worth it or not for you to lose sleep if you can catch this trade. But I think for the most part, that's the best case scenario for most of us who are trading and have jobs, to catch that trade, to sacrifice that first day of the week, and you go to work the rest of the week and you don't have to worry about your trading. But in this case, this was kind of like the NJ trade, where if you look at the daily chart, it bounced around, like it's been, it doesn't go, it just goes back and forth. So if you're a savvy trader, any of these days you can take advantage of the move from the top to the bottom of the market. So I don't want to get people caught up, on these different charts, because we don't actually have to use them. But if you did just look at this, and if you put a channel on here that cut off the bottom of the candle, and you put a channel that cut off the top, you can see where you could make decent money just with back and forth movements, every other day, or sometimes every day. This market has been just cashing you out. The way that we identified the trade was on a weekly setup, but these other clues, these other context clues are still relevant. So you just have to be cognizant of where you are in the market, as a trader, and what the price is doing. So if you can recognize these things and you can pick up on these movements, sometimes I like to just take the 15-minute chart and squeeze it in. So if you can see a pattern, or you can see, it doesn't have to be an exact pattern, but if you could have saw price come up here and do this right here, then maybe you could have draw you a line across these two, and you could have just traded it. And then once it broke to the bottom, it's selling, right? Maybe you don't know how far down it's going, but you could have took that breakout. Then when it double bottoms mean it's going up, so you could have bought it, But the point is, we have these moves mapped out, and I've kind of beat this two positions in 100 pip move to death. But 2 positions in 100 pip move will give most traders 10%. Especially if you're getting your entry off the 15-minute. It's going to give you 10%. And we talk about how to get in on the 15-minute every week. So you get 2 entries on this 15-minute chart, and you ride it up 100 pips, you've got 10%. Even if the trade goes 200 pips, you just need 100. Did that answer the question, Kenya? Maybe.
Yeah,
Question. All righty, you're welcome. Man, is Selena on the call?
I'm here.
Man, I don't even want to talk about this trade no more. All right, this is a trade that I was involved with.
Yep, it's gonna break my heart regardless. So it is what it is. But lesson learned.
Oh my God. Yeah, so this trade broke out. I mean, it started right here, right? So what happened, guys, is on Sunday, we got this initial push down. And I think I was asleep when the market opened. I was going to trade London because I was trading GU. So unfortunately for me and a couple other people, we got into this trade somewhere down here. And then the market pushed up on us and it picked up our hedges. I don't care about hedging, but for the people who are offended when their hedge gets picked up, it really hurts them and it affects them negatively, right? So this market pushed down, and at some point, we got into this trade on Sunday night, and then, of course, it rolled back up into our hedge. It just tapped back in, and then price did exactly what we wanted it to do. But because some people like Selena don't like hedging, even though you got this huge rejection candle, and the price promptly falls our 100 pips, it hits, it rejects, and then it falls 100 and some pips. So to me, the trade was over. I mean, 120 some pips. It actually fell further than that because it fell down to the bottom of this wick. But of course, I had cut my hedge off, and I made my profits by the time we got to the bottom. At the bottom, I think Selena, you say you stopped watching it. I think that's what happened. But at the bottom,
That's what happened. I stopped watching it. And I'm not
you went out.
clarification, sir.
Huh? You say you what?
I'm not great at it yet.
Well, yeah, I get it. Again, this is just something that I do every week. So I never kind of question it. So this is what happened at the bottom of this trade. I switched accounts and we did this push up. And I know that this order block here is one that didn't break through your moving average. But I didn't care because I just set my hedge at the bottom of this order block. The reason I took the trade was really two reasons. One, we were in my zone. Like this is my golden zone. This was an area that I had I guess established as a place that we needed to come to before we bought, right? Even if this was a retracement, from this top move, I figured that I had a chance at getting my percentage, right? And it happened, this just so happened to be a retracement, a pullback from that huge run. We just had a huge run of about 150 pips down, and it pulled back. So there was two reasons or two things that gave me confidence that I could hop in this trade and run off this 11% that I need, or my 10% for my other account that I needed. I didn't want to take it all the way up here. I said, man, this is giving me a 10% setup before we get the golden zone. So that gave me, I guess, more confidence that I could hop in this trade right here at this order block. And I could run off 11% if I set my trade up like this. It just so happened, it came right down, tapped me in the trade, and it was off to the races. One position, not two, just one. I held this trade for, I want to say 62 pips. Yeah, 62 pips for 10%. bam, trade over. It runs right into the golden zone, almost to the 78.6, then pushes down even past to where I got into the trade. And it hangs out down here until we got a little news. It took this is the liquidity grab. If you look at it on a higher time frame, price has been meandering around here. You get the liquidity grab on the news. And then you get the real trade that we all thought was going to happen. A 364 pip move that we thought was going to happen anyway, right? I got it. This is NFP week. I understand people who don't want to trade during news. You know, in fact, I wanted to get my pips on the first day and be out of the market because I don't really like trading the NFP either. But it's important when you go back and look, you kind of understand what happened. Even though our hedge got activated, you know, because we got into this trade too far down here and it rolled on us. You stick with the trade. I'm not in any danger. Had I not had a hedge, I would have lost 1%. But because I had a hedge, it allowed me to just hang out until I got this rejection candle. It was one move. Like once my hedge got picked up, we got this rejection candle. Even on the 4 hour, you can see a rejection candle. But the point is, it was a scenario that was kind of a textbook. Price comes down, you get in somewhere down here, you get in too late, really. We didn't wait to get tapped in like we probably should have. Like I even teach from the beginning. This is a bearish 4 hour candle, but since we were on the lower time frames, we got in somewhere along this candle. Well, what happened was price went to tap in on the 4 hour, and it put us in a bad situation. But we didn't lose 1%. The hedge just got activated. And once it started pushing away, and once we broke that area, where my hedge picked up, I cut my hedge. I ate well. I saw the pullback. I recognized it for a pullback. Now, if you look at this 4 hour, it just pulled back to the moving averages. And then it fell further. Then it pulled back just to the moving averages. It didn't hold the break. This is the break of the moving average. This next candle brought it right back. Then you get that liquidity grab, and then you get the run up. If you had just waited to trade this until Wednesday, you'd have made a killing. There were 1,000 opportunities. And the reason I like to go back and talk about these things is because this coming up week, we're going to have the same type of activity. If you look at this weekly candle, right? Let me just clear all these drawings. All we anticipated was for price to pull back, right? I liked the fact that we were at this bearish order block, because maybe we'd have pulled back and just kept going, right, to the moving averages. But I felt that we were going to pull back, and I felt we were going to push forward. I felt we pulled back to our golden zone, and I felt that we were going to go higher, because the Dixie was saying that it was going to sell. If the Dixie sells, then the rest of these will buy. I looked at this candle from last week on GJ. On GU, and I saw that GU candle had moved 362 pips. So I knew that on this retracement, it was going to go at least 100 and so pips, if we're going to get a good retracement. So I wasn't worried on whether or not I figured, I said, man, if this thing was going to go back 178 pips, I'm going to make my 10%. This is what I based my trade on this week. It's no different than if you look at this candle that we had this week, right? If y'all look at this candle, this price traveled 400 pips. Y'all know the pullback is going to be a beast. Y'all know y'all going to eat on the pullback. You can eat on the pullback next week. Or maybe it'll respect this order block and just pull all the way back. Maybe it'll just keep selling and it'll sell all the way to the moving average. I doubt it, but we don't know. We know it's going to be a pullback, and we know we can get our 10% on this one pullback. Easy money, easy trade. Sunday night, I'm done. Y'all have any questions on this? Bruh. Everybody understand? All right, I'm getting off call.
No, we understand. I mean, you explained it well. I mean, just realizing what we missed. Those of us who missed it. I know some people did quite well with this trade.
Well, yeah, I mean, this is every week though, guys. Like every week, man. Every freaking week. Every week. We haven't even talked about these JPY pairs. We haven't talked about like the man, like the possibilities that are out there, these crazy moves that are happening, man. Look, y'all know this pullback is gonna be crazy. And then it's gonna sell again. This pullback is gonna be crazy. And then it's gonna sell again. We're already below these moving averages. These are beautiful setups, man. Like these are setups that 5 years from now, you're gonna take these setups and like, man, this is my new house right here, just on this pullback. Or this is my new car when it pulls back. So it's a huge deal that we can look at these charts on the weekly, right? Like y'all see this bearish order block that did not close below these moving averages. Hopefully you're gonna buy this up first. Hopefully you're gonna buy it up first, right? Because if you don't buy it up first, you get in here trying to sell, you're gonna get your heart broke. So things like this, these are the things that we have to recognize, you know, as a trader. I'm not saying that it won't eventually sell, but I'm saying it's probably going to buy first, right? Come tap into the order block. Then if it's going to sell, it's going to push down. It might buy and just keep going up. I mean, I like the fact that we have lower highs, right? And the fact that that the lows are sitting here, but the problem is we have a moving average that has been respected. Price comes down to the moving average, it buys up. How many pips is that on that buy up? If you had just bought it every time it hit the moving average? 389 pips. It fell. So I'm not saying that it's going to buy up 389 pips this week, but even if it just bought up 200 pips and tapped in, man, 200 pips, you can get 50%. I'm not advocating for you to chase any like a ridiculous percentage, right? But I'm advocating for you to get into the trade, you know, on the 15-minute chart. Like we already know what we're expecting to see. This 4-hour chart needs to give us a bullish order block. It needs to close above, right, the moving averages. Once you get your bullish order block on the 4-hour, you can drop down to the 15 for your entry. Your 15-minute will be a bullish order block on the 15-minute. Of course, we're going to be well above the moving average by that time. And you just ride that trade up. That's where you're going to get your percentage. Do you have any questions? Any questions? Can I just show y'all a little trick real fast?
Please.
Yes, please.
Okay. Since everybody's at this point, hopefully everybody's comfortable looking at these 15-minute charts, right? Let's say that I have price that breaks my my moving.
Hey, Todd, real quick. Somebody asked about your moving averages that they can't find them. Can you show them how to do them real quick?
I can't find the same MAs as you have on TradingView. Let me show you. So hopefully you're pressing this indicator button right here. And then you type in moving, and bam, it comes right up, moving average right here. Now, of course, I have mine on favorites, but you just type in moving average.
But don't you have to change it to like 13 and 9 because it doesn't necessarily default to those?
Well, yeah, you got to change it. But I mean, that's Easy.
Well, you probably might want to show them how to change it, man.
Well, that wasn't the
Thank you,
question.
Sean.
That
Thank you.
wasn't the question.
Sean caught what I was putting down. Thank
But
you.
listen,
Oh my
God
gosh.
damn, man. I mean, how many times we gotta have this
so
conversation?
listen. do
I
y'all
mean,
need
I
help?
thought that's what he was gonna do because I don't know who Zoom user is, so I can't assume that
Well,
this person
I can't either,
knows
but hey,
how to do
they
it.
said they can't find the ones I'm using. So that means that maybe they're using MACD, maybe they're using a different. I mean, do you want to? If y'all want to know how to change the numbers on the moving
It's
average,
one person. You don't even know how long they've been in the group. Just show
well,
them
I
how to
agree.
do
So
it.
do you need to know how to change the number? The number, you go to this little wheel that says settings. Watch this, guys. Watch out now. So listen, when you go to this little settings thing, under style, you're going to use this green line for the smaller number. All right. You go to inputs, highlight this bad boy and hit 9 right there. Bam. Hit OK. That's going to be 9. For the other one, for those of you who don't know how to add it twice, you're going to have to go to indicators twice, click on moving average twice, and it's going to come to your page. Right? So when you go to the second one, settings, style, you change it to 13. I mean, inputs, you change it to 13. Style, you want the line to be red. Then you hit OK. There's your moving average. When the red one is on top, that means we're selling, right? When we start buying, the green one's on top. The moving averages should be on the top of your candles when you're selling, and it should touch the bottom of your candles when it's buying. If the moving averages are not touching your candles, that means that we have to adjust the length of time of those moving averages. And that's a totally different conversation. And there's a video that I posted about that.
It's the sarcasm for me.
Do I have any questions? Yuck, 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 yuck. All right, so let's talk about something. Let's talk about it, all right, guys, huh? Golly gee. Okay. So I don't know how in-depth everybody is in trading, right? But I'm going to give this a whirl, and hopefully I don't confuse you clowns, because you can open up a chart at any given time, you know, even if you don't understand how to do your weekly analysis or whatever, right? Let's just pretend, right? Let's pretend that we're looking at this trade and it came down, right? It broke this low. It pushed back up. You understood that it has to push back up before it breaks the other low. So this trade came down and it broke the low. And then it started pushing back to the upside. All right. Is everybody following me? Bueller?
Yes,
We are tracking, sir.
Okay. So hopefully we all anticipate this trade making it back at least to our golden zone, right? So what we're really doing is we're keeping an eye out for this zone, because this is where the golden zone starts. We know that price can push all the way to our OTE, but since we broke this low, we're expecting price to push down, right? So we're going to pretend that price comes here, pushes into our zone, and it gives us that 4 hour bearish OB, that coveted joint, you know, y'all know what I'm talking about, man. So it gives us that 4 hour bearish OB. This is for people who trade like me. They're a little bit more aggressive. You can get in this trade. You can drop down to the 15-minute and get in this trade right now. Okay. I know that everybody doesn't trade the same. So what I like to do here in this scenario, if I drop down to the 15-minute, I'm not really going to know where my moving averages are. So I have to draw them on this chart. If I'm going to drop down to this 15-minute, right, and take the trade, then what I have to understand is I know I'm below the moving average on the 15-minute. But if I'm going to take a trade on this time frame, right? Maybe I can incorporate this whole thing. Any trade that I take on this time frame is going to be a higher risk to me. So I want to make sure that I get a decent reward out of it, right? So you figure this is about a 9 pip trade. And if I know anything about trading, even if this doesn't break my moving average, it'll probably test the moving average, right? So I can probably take the trade to this area, and that's about 67 pips, and get about 6% out of it. Y'all understand that?
Yes.
You understand why I think I can take it this far?
Yes, thought we understand why.
Hey, I got ask, man. You know, next week, everybody will be asking me what happened. So I just want to make sure I'm not losing people.
Y'all, we need to ask some questions or some, everybody need to make their 10% because he gonna rip us a good one next week.
Well, so no, but do you I hope you're not missing out on a great
You think you can take it down there because you got to test the moving averages on the higher time frame. That's why
There
you
you go.
think you can take it down there.
So this is a sneaky trade that violates everything that I told you, you know, prior to me showing you this, right? Before I tell you, hey, only take the trade once it breaks the moving average, right? Is everybody tracking?
Mhm.
Yes.
Yes.
So here I just showed you how you can do it on the sneak tip before it breaks the moving average. Now here's the thing. This is probably going to come back and push. Like if I look at this on the 4-hour chart, see how it rejected already? This might come back up higher. Dang, and it did. So now you got the bullish order block. So you have to re-wait for your trade setup. Now, once I would have got in before this candle rejected. I got rejection from this candle right here. I would have dropped back down to the 15-minute right here to get my second entry or my real trade, right? This can be your real trade pushing down to the bottom on the 15-minute, and it would look something like it's too low. But this is what your trade could have looked like, and not no 30 pips either. After you get this bearish order block, see where the wick of this green candle is? After you get this bearish order block, your entry needs to go at this wick, because this tap in is going to be the one that you take to equal lows right here. right? You take this tap into equal lows, and that could be your second trade. You know, I mean, you got that one trade that you cheated on, and now you have this second trade that you use for your you know, I guess the remainder of your percentage. This is taking like 30 hours. In this scenario, I would move my stop loss right here. I would set a stop loss right here. It hit my stop loss. That's cool. I mean, it'll take me out, but so I would have made, I mean, you would have probably been pissed off, but you have to protect that trade because you don't want it to roll back up on you. You know what I'm saying? You could have got back in. Why is it doing? You could have got back in afterwards on a different position. If you were watching it. So once this wick would have stopped you out and you got this order block, you could have got right back in on the pullback. But you have to protect this trade in case it goes back up, because the pullback, I mean, you got the fib, you can throw the fib on here. You knew your pullback was going to be in this region, but I would have been protected by this order block. There's no way you can let that trade roll back past your order block and not kill it. So you would have gotten stopped out, which would have given you still 5% on this trade. You see that? So that first trade coming down, you would have made what, 6%? The one I showed you 6.88, and this 5.2, you're done. You wouldn't even have needed this other position. I mean, this other thing. But I know y'all greedy mofos would have jumped back in the trade anyway, instead of just being cool with 11%. You guys have any questions over anything we saw? Anything?
There's a question in the comments.
6.88, 5.2 is 7 plus 5. That's 12%. That trade is 12. Those two trades for 12%. The 4-hour bull OB, why was that not considered for a move? Which 4-hour bull OB?
The one that showed up after the sell trade.
This right here?
No,
The
further
one
to the right by the moving averages that you marked right there.
right below the moving averages, and that's why it wasn't considered. Whoever asked the
Where's the
question.
bullish order OB? Right here?
No, further
Right
up.
under the moving average in the middle. I mean, that could be one, but
This
there's
right here?
one.
Yeah,
Well, it's exactly what so it's a bullish order block, but it's, first of all, it's not, it did close above the moving average, but the trade is moving down, right? This trade is moving down. All this is right here is a retracement to our zone. This bullish order block is just moving price back to the moving average. Remember, we can't get locked in on one single order block in the middle of a move. This move started way up here. Remember, I said we already knew that we broke this low. We knew that this was a retracement back to our golden zone. That's why we marked the golden zone, right? You got that, Felicia? This is very important. So we pull back to the golden zone. We'd already broke the structure going to the bottom side. We pull back to our zone, right?
Right.
This was the first order block was a sneak trade. You know, this trade was a sneaky trade because we just jumped down to the 15-minute to trade this to the moving averages on the 4-hour. Because you can assume that you're going to get this move from where we are at least to the moving averages, even if it bounces and goes higher. So because we got the sneak move on the 15-minute chart, because we were able to get this sneak move and it gave us almost 7%, now we're in the driver's seat. We expect, remember I said we expect the bounce from the moving average. The bounce happened from down here, but it's still the same thing. It's a bounce from the moving average, right? I know that you're looking at this as a bullish order block, and it is a bullish, it shows up as a bullish order block on the 4-hour. But where did the bullish order block go to? It went to the same equal highs, right? It did not break this 4-hour order block. This is up where the 4-hour order block was. You agree with that?
Yes.
And when you think about this, on the grander scale, this is just price doing what? You got this zone that was created, pushes down, it comes right back to the zone, and then it falls off. The anticipation or the expectation all along was for price to continue to drop, because that's what it did. Price was here, it broke these highs, it came back and broke the low. So you know it's going to go up and drop. It's a classic head and shoulders if you look at it. And I'm just trying to help us as a group get our percentage and not have to worry about, you don't have to ride this trade all the way down. Back in the day, I used to have to ride the trade for as far as it'll go to make as much money as I can make. And that's just counterproductive because like it or not, we're all emotional people. And we get emotions tied up in it, you know? So you might look at your phone and you're up $500, and then you get this pullback and now you're up $100. And now you cut, I'm taking my $100. And then you get this serious drop here, you know, where you would have been up $1,000, then this pullback, now you're up $250, you know? So in order to keep us out of these emotional situations, just take the trades that are available to you that give you the highest risk reward. And here, quite honestly, if you recognize this as a push down and this is a pullback and you expecting a push down, any of us could have got on that 15-minute chart. Now, this is where we have to know ourselves, guys. But any of us could have got on this 15-minute chart and we could have sat in this 15-minute trade, you know, for this entire move, at least to these equal bottoms. It would have worked, but your nerves probably would be shot. You know what I'm saying? You would have made 20% if you get in this 15-minute trade and hold it until it gets to the bottom. You made 20%. That's entirely doable, but I don't know if mentally that the people in this group are ready for that type of movement, right? If you can hold a trade, this is available to you every week, if you can hold your trade. But if you know you can't hold a trade, there's not even any sense in me talking about this, because it'll never happen, because you can't hold the trade. And every time you get the pullback, your nerves, you know, and your stomach get clenched up, which is fine. I think that, you know, it's fine to go in steps and increments. You know, most people can't hold a trade for 340 pips. I understand that. I've been doing this a while. But if you can do it, this is available to you every week. And all you have to do is wait for the pullbacks to everybody. All of us see pullbacks on these 4-hour charts, right? Or even on a daily chart, you know, which is still really my favorite chart to look at. But if you can see the pullback on this 4-hour chart, And as soon as you get that bearish order block, you hop in there. I mean, you're going to ride that thing down to equal lows. Just this move to equal lows is going to pay out like you've never been paid before. If you take this to the other leg that it's going, like if you can identify a newer low, you know, maybe an imbalance in this chart, maybe this order block. If you could have identified these areas and taken this trade all the way to that order block, then you've made, you know, 31%. But if you're not there as a trader, you don't necessarily have to try to get there right now. You know, trading is something that happens over the course of time. So you might not be this type of trader for 2 more years, but this is definitely available to you and in your future. Some of y'all are going to be this type of trader by January, man. It just doesn't take a lot of extra, right? Because all of us have traded these higher time frames already. Most of us haven't traded the 15-minute chart. So by you understanding what you're looking at on the higher time frame will probably give you confidence to hold your trade, you know, even though you're up thousands and thousands of dollars. This is what takes your trading to the next level, right? It's not seeing a bigger setup. We see big enough setups. We see setups that probably most traders don't see because most traders aren't up here at the weekly chart trying to identify what's going to happen this week. We're able to successfully do that. Now all we have to do is be able to enter that same setup on a lower time frame, right? You can do this from the 5-minute chart. Trust, can't you? Did I show you that, Selena? On the 5-minute, you can enter.
Yeah.
Right? But it's just going to be a higher risk to you because maybe that 5-minute gets rolled back on, right? If you don't enter in the right spot. You could have entered this trade. Once you get this 4-hour order block, you could have entered on the 5-minute too. But the thing is, if your entry isn't perfect, then maybe you give up some of those pips. You guys have any questions? We kind of long, man. So you know, I guess I kind of want to get into the weekly analysis. But if y'all want to get in, you can ask.
I think for me, going back to what Felicia said, is that, you know, I've become dependent on the 4-hour order block. That's where I take my, you know, it's like my Bible. And I know that I should pay attention to everything around me. But I think that 4-hour order block, because I'm looking at the MAs and I'm looking at where the candle closed, I'm looking at the order block. And then I'm thinking, man, this is it. You know what I'm saying? It's getting ready to, you know, buy up because I'll see an imbalance up there. I'm like, okay, it's probably going to at least buy up to the imbalance or something like that. So, yeah.
So you're saying this bullish order block?
Yeah, the bullish order block that she was speaking of earlier.
Selena,
but that's not an imbalance though. But never mind.
Yeah, I really think y'all are overly
overthinking it.
on imbalances. You know, but even before this stuff unfolds, let's just replay this. Or wait, how do I replay it from down here? Can I just take this and replay it?
Yeah.
Okay. So even on this move, even on this 4-hour move, right? You're coming from this high, you broke this low. You don't expect some pullback?
Yeah. You're right.
So even when you put your fib on it, where do you expect the pullback to go to? OTE?
78. Yeah.
No, y'all, like this stuff is in our face. I got it. It's an order block, but let's not ignore what's going on. It is an order block, but it's an order block to take us back to the OTE after we broke a low. We didn't break a high and going higher. We broke a low. You have to have a green candle that takes you back to where you need to be taken. So let's not get bent out of shape on us having an order block. the overall analysis, when we looked at the overall analysis, we said we were coming from this high, right? We broke this low, we broke this low. So now we had to have a pullback. We pulled back to our zone. And now we're pushing away. We broke another low on the 4 hour. You can't ignore the market structure. Its structure is going to ultimately decide, what's going on. So the fact that we broke this low going away from our zone should have been confirmation to you, not a red flag. And when it pulled back, that's your entry right there. You could have got another entry. You could have really sold this. You could have went ham at this point. Just if you were a OTE trader, you could have had an entry something like this. A 28 pip entry on the 4 hour chart. All you needed to do was protect the top of these order blocks. And then you could have taken this trade, from here to Kingdom Come. But if you really wanted to show out, you could have dropped down to the 5 minute, at this point. Once your trade hit the OTE, you can drop down to the 5 minute and get you a position and go south. Though that's kind of high level stuff. But the point is, don't let an arbitrary order block in the middle of a move change your bias. Like the bias that we all talked about was we're saying that this is going to go down, right? So it's really confusing to me how you would change your thought process that fast when you just get one order block in the middle of a high and a low.
You know what this is also a good example of? How we always talk about dropping down on those lower time frames and seeing order block for a particular direction. And we always say you will get your ass washed up in a wave if you're not paying attention to the higher time frames. That's what it's an example of, because if you're aware of the higher time frames, you probably know it's a pullback versus a real bullish move.
For shizzle. But I just wanted to share that with you guys. I think 2023 should be, man, it should be crazy for everybody involved on this call. It should really be mind altering and finance altering, because
Amen. Amen.
we are not the same as we were coming into 2022. And some of us thought that we were doing very well going into 2022, and we were for that time frame. But going into 2023, seeing what we see, understanding how the market moves, it will definitely be people blowing up, from this chat group, and that's awesome. That was always the intent, So if you're struggling now, who cares? We all struggle. All of us struggle. So if you're struggling now, welcome to the club. The struggle is real. Shed some tears, look at your charts, keep coming back. The victory is in that struggle. Enjoy that struggle, because that's what's going to propel you to the next level, of your trading journey.